Good morning. CoinDesk is live here at Crypto Bahamas, the FTX SALT conference. We're talking to the movers and shakers of the crypto industry. And this is First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Good morning, Lawrence. Can't complain. Beautiful sun, beautiful ocean.
Yeah, you're indoors. It looks like you're indoors, though. It looks like you're indoors, and you have this big monitor behind you.
Place with very cold air conditioning. Yes.
But I'm fascinated by what's behind you.
You called me out.
Yeah. I'm very
Let's have a look at
by
Bitcoin. The CoinDesk Bitcoin price XBX index currently at $39,450. Bitcoin slightly up about 1.3% over the past 24 hours. The CoinDesk Ether price ETX index at 2909. ETH is also climbing about 1.4%. The DFX CoinDesk DeFi index is at 238, also making gains of just about 1.1%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, Lawrence. So we've got some economic data out.
Yeah,
real GDP. Not good.
Real GDP, inflation-adjusted GDP is it was actually down 1.4% compared to what analysts were expecting. It was actually they were expecting it to be up 1%. So this is a 2.4% misfire, if you will.
How's that impacting the markets?
So far, when it comes to crypto, at least, crypto hasn't really budged. But the interesting thing is going to be this. If the economy is slowing down, then the whole pace of raising interest rates and raising the Fed funds rate may not, the impetus for raising it, let's say 50 basis points instead of 25 basis points in the next meeting isn't quite as there as it was before. That said, this is kind of a weird time to adjust for inflation because we have these huge inflation numbers and we're not 100% sure yet what it really all means for the overall economy. You know, prices haven't quite stable. We've had 4 decades of like 2% inflation every year and pretty predictable pricing, et cetera. And now we're in this kind of a weird phase. So whether or not the economy really contracted or was it worse, was it better? That's still not, I wouldn't say it's 100% there. It'll be interesting to see what the Fed does with all this information.
Well, let's dive further with our markets guest. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, Dragonfly Capital has closed its third fund with $650 million in capital, pushing the firm's assets under management to around $3 billion. The fund will focus on all stages of blockchain and crypto companies creating new digital economies. And in the past, that has included projects like Avalanche, Near Protocol, as well as MakerDAO. All right, joining us now to discuss the crypto markets is Haseeb Qureshi, managing partner at Dragonfly Capital. Welcome, Haseeb.
Hey, thanks for having me.
So we're seeing a slight bounce in the crypto markets right now. It's thin volumes, tight trading range. Where do you see the outlook in the short term for crypto?
Yeah, in the short term, clearly, this is the year that macro is in the driver's seat, and it sort of seems this year that no matter what's happening in crypto fundamentals, markets are mostly consumed with what's happening in macro, right? What's happening with respect to rates, what's happening with the war in Ukraine, what's happening with the U.S. economy. The expectation is that over time, once macro settles down a bit, I mean, obviously, volatility has been extremely high over the last 2 years, but particularly pronounced over this 6-month period. Once that volatility goes down, I think you're going to see more decoupling between crypto and traditional equities and the broader macro economy, because of course crypto has its own fundamentals that actually look pretty healthy right now. But the big thing that's been surprising is that although crypto growth stocks like Coinbase and other things that are publicly traded, they've been getting destroyed alongside all other technology stocks. But cryptocurrencies themselves have actually been a relatively good investment compared to other things that are far out on the risk curve. So that feels to me like things to be optimistic about is that for the most part, investors still perceive cryptocurrencies to be strong investments.
mismatch?
It's a good question. I mean, part of it, of course, is that each of the crypto growth stocks that you see, they have other secular properties. Like people are anticipating that there are going to be tighter spreads, that these assets are going to get more regulated, which means that it's likely to cut into some of their profits. So there's some idiosyncratic reasons why that's happening. But another reason is that the reality is it's hard right now for institutional investors to own that much crypto. It's a lot easier for them to own a lot of Coinbase or to own a lot of these growth equities. But if you look at if you just assume that okay, there's a big sell-off in the U.S. in particular, of course, different economies are functioning in different timelines. There's a big sell-off in the U.S., but the holders of crypto are actually very globally distributed, right? So it's much more akin in that sense to something like gold, which has a global market and a global holder base. So that even if what's happening in one economy is not great, it doesn't necessarily totally drive down the value of a single asset. Whereas, in some sense, it might be a boon that we don't have a Bitcoin ETF yet, because if we did, it's very likely there'd be a large set of institutional holders, and Bitcoin would trade roughly in line with their riskier part of their portfolio. So if U.S. institutions are saying, look, we're going to dump anything far out on the risk curve and move more into bonds and move more into safer assets, then what that's telling you is that okay, but they don't have that much Bitcoin to dump.
Where would you see Bitcoin by the end of the year?
I have no clue. I mean, I'm a venture capitalist. I'm not in the price prediction business.
Speaking of venture capitalism, you just raised a massive fund worth hundreds of millions of dollars, and I suppose the question is, you had some big hits with Avalanche, with New Protocol, with MakerDAO. So I wonder, what are you planning to invest in next?
Well, I mean, we invest at every stage: seed, Series A, Series B, and beyond. And we also we invest in every category in crypto. So we do DeFi, we do layer ones, we do interoperability, we do NFTs and their infrastructure applications. So we do everything. The reality is that it's very hard to predict where crypto is going. There's some really obvious problems that need to get solved. So there's some issues around privacy. There's some issues around interoperability. There's some issues around scaling. Everyone kind of knows the things that are janky today about crypto, and those need to get solved for us to get to the next stage of adoption. But the reality is, back in 2019, 2020, nobody could have predicted what was going to happen just over a couple of years because of a global pandemic, right? Crypto responds to the changes in the world, and the job I see of a venture capitalist is not to try to predict the future, but to try to pay attention to the present. And to realize, hey, these are the problems with crypto, and we're going to fund people who are going to try to solve them. But what's going to happen 2-3 years from now? It's so hard to predict where technology goes. I've given up on that a long time ago.
My understanding, though, was with your previous funds, you were focused on really early seed stage investments, but this one you're going to focus on later stage investments? We're
not focusing on later stage. Okay. We're still doing the seed and the Series A, but we can write more checks that are later stage, write larger checks as well. But we're not a growth stage fund, right? So we're not going to go invest into like the Series D, Series E of a company. That's for the Tigers and SoftBanks of the world.
Well, so for the moment right now, what is the investment thesis?
The investment thesis. I don't believe in investment theses because.
Well, you want to be nimble. You want to pivot.
Exactly.
Okay.
I think it's too prescriptive in crypto to have an investment thesis.
What projects are really interesting to you right now?
Right now, I'm very excited actually about a project called Axelar. So Axelar is a interoperability protocol that allows you from let's say you're on Solana or on Avalanche and you want to interact with a smart contract that's on Ethereum without going on Ethereum, setting up your MetaMask, doing all this other stuff. What protocols like Axelar, interoperability protocols, what they allow you to do is to, within a single transaction, call a contract on another chain or send money to another chain as though you were already there. And what that does is it sort of makes crypto and public blockchains feel more like the internet. Right? When you're interacting with the website on the internet, you don't feel like, oh, okay, I'm going to this other third-party service that this website uses on the back end. You have no idea what they're using on the back end. It doesn't matter if there's multiple servers. But in blockchain, we feel it very acutely when you have to move to another chain, you have to go traverse a bridge, you have to do all this nonsense. Eventually, that will go away. Right? Eventually, it will be opaque to you as an end user which blockchain you're interacting with and what's happening on the back end. And interoperability protocols like Axelar will make that happen. So that's one thing. I'm generally very excited about interoperability because it's very clear we're not going to live in a single blockchain world. You're going to need multiple blockchains in order to make all this stuff be scalable enough to happen at a world scale. And projects like Axelar are one part of the solution to that problem.
There have been a lot of exploits on bridges and such lately. I wonder, is that a concern with the hacking attempts on those bridges?
It's always a concern. It's always a concern. Yeah, I mean, look, bridges are hard. That's why they get hacked. Easy things don't get hacked. So it's very clear that it's going to take a while before these things are robust enough that I'd want to see the billions of dollars locked away in them. So the answer for everything, I mean, I think this is also true for a lot of the ZK technology that people are really excited about. We are as well. We're early investors into Matter Labs, which is one of the leading ZK rollups. But the reality is that this technology is really
ZK
hard.
Knowledge proof. It's just a knowledge layer, a privacy layer on top of blockchain.
Not privacy, scalability. It's a scalability layer using zero knowledge proof. So it's very esoteric, cryptographic technology. It's like, okay, it's moon math. No one really, very few people understand how it works. The reality is that we know that it does work in theory. But in practice, it's very, very hard to get every single detail right. Now, eventually, it'll be gotten right, but it takes time. And the thing about crypto, and this is kind of the original sin of crypto, is that we're an impatient crew, and so the moment that something is live, people are like, oh great, let me go put in $50 million into it. So I wouldn't recommend anybody put their life savings into this stuff for the next year or so. Like, let people work out the kinks. Like, these technologists have a lot of work to do, but it'll get there. And when it does, I think the scale of the problem is massive.
So you're here at Crypto Bahamas, a lot of networking opportunities with hedge funds and institutional investors. So I wonder, what are those conversations like that strike out, which you feel interesting?
I don't have as many conversations with the hedge funds and institutions. We don't have as much to talk about. Most of my time here.
And you just raised a fund.
We did.
Here's what I want to ask.
Okay, go ahead.
We hear a lot about institutional investors coming into the forum, but are they new investors, or are they just the same people?
There's definitely a lot of new investors.
Okay.
So most of the folks who allocate to us, for example, they've made some initial steps. We're not the first thing they've done in crypto, right? So generally, my rule of thumb when we're talking to potential partners is that if you've never made any money in crypto, you're probably not going to invest into a crypto venture fund, right? You have to at least make some money. You have to invest in Bitcoin, it goes up. You have to invest in Coinbase, and it does well. If you don't have that thing in your head that like, oh, crypto is good, I make money doing it. The people, interestingly, there were a lot of institutions who deployed very gingerly in 2017, 2018, and they lost money. And most of those institutions are like, never again. Yeah. They are the people who are like, this stuff is...
If they had held on, though,
if they had held on, they would be very in the money. They'd be very in the money. But psychology being what it is, crypto, ultimately, although we're doing everything we can to make crypto more like a boring asset class, it's still very emotional for most people, their relationship with crypto. And I think it's going to take a long time before that changes and people can view crypto in this objective, kind of dry way. But we're not there yet. And so most of the people who we talk to at these institutions, there's still mixed feelings within many of these institutions, especially the kind of old guard at many of these institutions are like, I don't really get crypto. It still feels illegitimate to me. But there are enough people internally who can make those things happen, right? So it's not that it's like 100% of people at these institutions are on board.
I don't know about that because like a lot 50, of the people 60%. I've been talking to are former Goldman, BlackRock folks who just tried to get it done in their own, traditional legacy finance institutions. It couldn't be done. Now they're in crypto.
Right. I mean, there are obviously some institutions that still can't get over the line, right?
Yeah.
So, JP Morgan is the most famous example because of Jamie Dimon. But the reality is that more and more institutions are turning. It's just happening. We see it very obviously. And a large part of that is just the enormous amount of legitimacy that the space has garnered over the last couple of years.
What are some of their concerns?
I mean, some of their concerns are just, the most obvious concern is what our regulators are going to think. Mm-hmm. And, we were just, I was at a dinner last night with some of the Circle team as well as some of, some other kind of big Wall Street types that, a year ago would never have been caught dead at a conference like this. But, here they are and they're engaging seriously with crypto and with Web3, but they're trying to understand how does it fit into our mandate and also our regulatory story. Because there are certain things that they can do and certain things that they can't do. And so, putting Bitcoin on the balance sheet, it's like, no way. That it's untenable. Allowing customers to trade these assets before the SEC approves a Bitcoin ETF, it's like, okay, well, they're telling us that these markets are unregulated, right? They're trying to read past the signals of what Gensler thinks about this stuff and inferring, okay, I don't want to get in trouble with my regulator. Like, I've got a gigantic business to protect. So as much as I love crypto and I think it's cool, I'm okay with being 3 years late, right? It's not a big deal to me.
So that's the hump they need to get over.
Yes. Whereas if you see institutional allocators, we're starting to see more and more, foundations, endowments, sovereign wealth funds, they're getting into the space. They're already in the space. They understand that, look, if you're a purely financial investor, you have to get exposure to this industry. It's so important. It's so systemically important. Mm-hmm. But if you're a big bank, and you're very, very deeply regulated. I mean, the old truism is that if you're a bank in the U.S., your first customer is your regulator, not your customers. And you make them happy first, and then you make the customers happy. And that's very much their attitude, I think, towards this industry.
All right, well, got to get over that hump, that first client.
That's right.
Make the regulator happy. All right,
That's right.
Haseeb, thanks for joining us. Appreciate you coming on with us and he had to race over to make it here, so
That's
we
right.
appreciate that.
Well, thanks so much for having me.
And congratulations on your fund.
Thank you.
All right, that was Haseeb Qureshi, managing partner at Dragonfly Capital. Next up, we're checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Let's have a quick look at the markets. Right now, the CoinDesk Bitcoin price XVX index is trading at $39,450. Bitcoin is up about 1.4%. The CoinDesk Ether price ETX index is at 2898, also climbing at just over 1%. The DFX CoinDesk DeFi index is at 237, slightly up about 0.7%. All right,
It's time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick.
Hey, good morning.
So, Central African Republic, we've been waiting for months since El Salvador announced that it was going to adopt Bitcoin. We've been waiting for the number 2 country, the second country to adopt it, and it turns out to be Central African Republic, Centrafrique. What's interesting about this is that, at least from my perspective, and you can correct me if, I think we're looking at now there are 2 countries that have adopted Bitcoin as legal tender, and both of these countries don't have control over their monetary policy. El Salvador was using the U.S. dollar directly as a currency. Central African Republic was using the CFA, which is it's kind of a holdover from colonial times. It's a central. It's used by all these countries in Africa, in Central Africa, that were French colonies. It's based on the euro. So here we have 2 countries that have adopted Bitcoin. Both of them don't control their monetary policy. So what does that tell you? What do you think is going on here?
Hey, yeah, no, you're absolutely correct. It is definitely interesting that this is how we're kind of seeing this nation-state approach to crypto. It makes sense, though, if you think about it, because, one of the ideas behind crypto is that, or at least Bitcoin, is that, there's no central authority controlling the monetary policy. So, whereas when you're dependent on other nations' currencies, you might be somewhat dependent on, how those countries are approaching monetary policy. So, El Salvador, for example, looking at the dollar, looking at everything the U.S. central bank did with the dollar over the past 2 years of the pandemic, it makes sense that, one of the ideas they might be going for is a way to offload off of that particular system. And I'm sure the same thing is happening here. Although I will say the other thing that's really interesting to me is that both of these countries are also examples of nations that don't have, a tremendous amount of internet connectivity. So I'm really curious to see how, the Central African Republic's Bitcoin experiment will play out, and whether or not it's going to be similar to El Salvador's experiment, where, 6-7 months in, we're seeing kind of a decline in interest and usage of Bitcoin as a currency, partly because of, the rollout of the Chivo wallet, partly because of a lack of interest from the residents, and also just partly because, a lot of folks can't have access to it. They are unable, they do not have the infrastructure access that will enable them to use Bitcoin.
Yeah, you know what? And another thing about the Central African Republic is it's actually the worst country in the world, I believe, when it comes to Gini scores. In terms of, so in other words, you have a lot of wealth concentrated at the very top of the social economic political structure in that country. So having Bitcoin as legal tender and having internet connectivity it sounds like that's the kind of thing that would benefit the people at the very top and perhaps not everyone else. And so this is yet another example, at least, of, certain select few being able to access digital assets and to get wealthy off of it, while the rest of the population in a country that has had years, decades, since I was a kid, of just horrible economic and political strife, and just some pretty wacky leadership sometimes. But yeah, so it'll be interesting to see how that plays out. Well, thank you, Nick.
Absolutely, yeah.
Good seeing you again. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. And please don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
All right, next up, we've got Dan Jeffries, the Managing Director at the AI Infrastructure Alliance. He takes his crystal ball to foresee the future of payments.
Hey, I'm Isaiah Jackson, host of Community Crypto and author of Bitcoin in Black America. You're watching CoinDesk TV?
Welcome back. As part of Payments Week, all week long at CoinDesk, we're publishing articles on how cryptocurrencies are being used for payments. Joining us now to discuss why fast, fluid, frictionless payments are the future. Dan Jeffries, Managing Editor at AI Infrastructure Alliance. Welcome, Dan.
How are you doing? I'm doing just fine.
Great to hear. I read your piece, and which is called, it's a mouthful to say on air, but nonetheless, I'll try again. Fast, fluid, frictionless payments are the future. So when we step back a bit here, and this is kind of like a 30,000-foot view of what the future might look like. You see that, the future in crypto is in its ability to eventually process payments and the likes, and you see a different world. My question at the very start is this: is that necessarily something that's needed for crypto? Can it be as part of the current system that we have in place? Why not serve a purpose as just the store of value, as it has been? Isn't that enough? We've turned it into $1 trillion sized economy. Isn't that enough? Why do we need these payments? Maybe we're defining it the old way as to what a currency is. Why not a cryptocurrency just be a store of value?
Well, I mean, it has to be useful in some way. And the problem is, like, $1 trillion market is not very big, right? It's smaller than some of the biggest companies in the world. I think at its peak, it hit something like $3 trillion. And that's not much bigger than Apple or Saudi Aramco. So we're talking about an economy that's smaller than a single company and essentially smaller than a banana republic. So I always say essentially crypto is a banana republic. And we're essentially just trading currency and flipping some JPEGs. And so my general premise is that you've got to have things that are really useful in the real world for an ecosystem to evolve, right? And when you look at historically technologies that kind of reach a critical mass, and we're very much in this sort of early adopter phase, they have to do something that, like, people simply can't live without. And I don't believe currency trading and, like, NFTs are the thing that get us there. But I do believe the ability to have sort of micropayments and these sort of frictionless transactions that allow us to like move money across the world, stream it to different websites or videos, things like that, that's tied into even an identity or whatever, can certainly be one of the potential killer apps that kind of evolves the ecosystem.
So why crypto, and why not just on a centralized database that we have now? I mean, why can't we already do all these things? And I kind of want you to talk about what was in your piece, because you do go into detail about what you see the future being in terms of micropayments and the likes, and how you see the advertising model change. So as well, just if you can give the sort of the highlights of what you wrote, because it was a very interesting piece.
Yeah, look, there's no reason it can't be central bank digital currencies and crypto. I always say both of them are going to exist, right? In the best case scenario. In the worst case scenario, central bank digital currencies kill crypto. But I see crypto as sort of a parallel economic operating system for the world. And absolutely, central bank digital currencies are going to exist. And one of the things they talk about is we've got to be able to mirror all of the different kinds of payments and monetary systems in the world. It can't just be a deflationary currency, right? That's only one type of asset in the world. So it's got to be able to mimic lots of different types of access. And when I look at something like now, you've already got kind of the surveillance economy, which is essentially built on advertising, starting to show some of its cracks. And you have sort of regulators taking their, jabs at it. You've got, the legislation that was just passed in the EU about it. They're starting to take a look at those algorithms. In many ways, people would love to see the death of that business model, but something's got to replace it, right? I mean, we saw in the dot-com boom, you can't just, spend $1 billion on a company and equate it to page views and go, that's great. Somebody still has to pay for the IT staff and the bandwidth and the servers and all the people to run it in the software, right? So something has to replace that advertising model. I don't think the advertising model goes away, but one of those things is streaming payments. And the idea would be, if I have a decentralized identity, especially one that is layered, one where I have like, this is Dan Jeffries, I exist, that's my layer, you can't take it away from me. But I layer on other types of identities. I work for this company. I work at this. I'm in this nation state. That gives me different privileges. That's the type of thing that can transparently authenticate and just stream payments to something like a Spotify.
So I want to ask this though. We have, you brought up Spotify. You brought up the surveillance economy, if you will. But part of why that has been successful is that experientially for people, they kind of like having those suggested discoveries. For instance, you go on eBay, you're interested, you've been tracked, and now you start to see the things that you're interested in. You go to Spotify, you have music that is suggested to you based on your previous purchases. You go on Amazon and you get tons of recommendations, et cetera, that while we might decry it and say, hey, this is too intrusive, yet it seems to work because it rewards the user with something. If we transfer over to micropayments for service, doesn't that the overall experience actually decline and the overall transaction and economy decline because you're not constantly suggesting to the user new ideas, new products, et cetera? Is there an economic incentive to transfer to this world?
I don't see them at odds with each other, right? In other words, I don't think that the surveillance economy completely goes away. And you're absolutely right. The reason it works is because it's useful. In society, we love to complain about everything today. And one of the things we love to complain about is ad tracking. Meanwhile, it's showing me a lot of useful stuff that I really enjoy. But one of the things I point out in the article is we've gotten to the point that it's either advertising or it's sort of like a payment wall for a lot of these sites. And the problem is, certain gigantic content distributors are going to get your dollars in the common system because there's no way to kind of do a micropayment or a payment without like whipping out your credit card, filling in a bunch of information, typing it in. And so, I could think about something like The Economist, right, which I subscribe to, but I probably read like 50 of their 2 paragraph articles that are like subscribe before I finally whipped out my credit card, right? And so I feel like for most of the time, you're only subscribing to a few different of these sort of paywalls that exist there because they're not, they don't provide enough compelling content. But if I just want to read like 1 or 2 stories and I want to be able to do it transparently and never even have to think about whipping out a piece of plastic and typing in a bunch of information, if all of that could be automated, that's fantastic. And there's no reason it can't work hand in hand at some level with that advertising that shows me a bunch of cool stuff that I want to see. I mean, half the time my phone is curating amazing artificial intelligence stories, right? I mean, and that's incredibly helpful for my research in the AI industry. And I'd love to be able to do, some of them are behind a paywall, but I'm probably not going to join the site to see it because it's going to take me 10 minutes to freaking sign up.
Well, at least you have CoinDesk, which is available for everybody to see for free. Well, thank you again, Dan Jeffries. That was AI Infrastructure Alliance Managing Director Dan Jeffries, and he has a fascinating piece in this week's CoinDesk and on CoinDesk.com. And of course, you can see that and other things. So this week is Payments Week on CoinDesk.com/Payments Week.
Awesome, Lawrence. All right, let's check in with Crypto Twitter for our tweet of the day. This one is from Jim Greco. Tweeting, getting charged a 3% markup on my wine purchase for using a MasterCard instead of a check is almost enough to put on the laser eyes. Is that what's going to take, Lawrence? These fees from intermediaries? Maybe we just get tired of them. I don't know.
Yeah, everyone says that, and yet they still use it. Okay.
One day it's going to get so easy that everyone will want to use crypto. We'll get there. That's it for our first mover. Thank you, Lawrence. I'm your host, Christine Lee, as well. Also join us at noon Eastern for The Hash, and yours truly for All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Also next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
The OK Bears have taken the NFT world by storm. Welcome to the daily forecast, April 28th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. The OK Bears' claim of being just okay seems pretty humble right now after the Solana-based collection of 10,000 NFT avatars topped CryptoSlam's NFT chart and helped Solana cross the $2 billion mark in total sales. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
First up, Bitcoin mining difficulty has hit an all-time high. Wednesday's adjustment saw an increase of over 5% on the last adjustment from 2 weeks ago. Bitcoin mining difficulty is a measure of how hard a miner has to work to verify transactions on a block in the blockchain, with adjustments happening every 2016 blocks, which usually takes around 2 weeks. The adjustments are highly correlated to changes in the mining hash rate, which is the amount of computing power used per second when mining. A higher hash rate suggests more mining activity, and as the hash rate increases, the mining difficulty typically follows. Miners are increasingly seeking cleaner energy sources to offset their carbon footprint from increased mining, with the most recent quarterly survey from the Bitcoin Mining Council showing that almost 60% of Bitcoin mining now uses sustainable energy. And over in Singapore, the Lion City says it aims to position itself as a, quote, responsible crypto hub. Speaking at a Financial Times summit on Wednesday, the Monetary Authority of Singapore's Managing Director Ravi Menon said the country's licensing process is stringent because they want to be a global crypto hub with innovative players and strong risk management capabilities. He added that the MAS only approves applicants with strong governance structures, and applicants need to be familiar with money laundering and terrorist financing risks. Menon said the MAS has given licenses or in-principle approvals to 11 digital payment token or DPT service providers over the last 2 years. However, almost 100 applications are still awaiting approval. According to media reports, the latest to gain an in-principle approval is the fintech firm Revolut. This means the company is now allowed to provide cryptocurrency services to customers in Singapore. Menon said granting licenses to crypto asset service providers mostly depends on their ability to manage risks.
Many of them are young players with little experience of banking or regulated activities. So there's a culture issue to bridge. They are innovative, they're nimble, they think out of the box, which is all great. We want that, but they do need to have a risk governance culture. And so that's something we pay close attention to.
You can find those stories and more at forecast.news. Over in the NFT space, OKBear's Solana-based NFTs notched a record of more than $14 million worth of secondary sales in the 24 hours to Thursday morning in Asia. So have they helped the network establish itself as a viable alternative to Ethereum, which is the preferred platform for most NFTs? Forecast Lachlan Keller reports.
The Solana-based profile picture project, which features 10,000 unique avatars, was only launched yesterday on the Magic Eden NFT platform. Minted at a price of just 1.5 Sol, the native currency of the Solana network, or just under $150, they've since gone down a storm on the secondary market. According to data from CryptoSlam, sales soared by up to 60% overnight, hitting $14 million and beating all Ethereum-based NFT projects so far. In a tweet, the OKBears project said their success is a celebration of the entire Solana blockchain, and that they didn't get to where they are alone, nor do they intend to move forward alone either. Speaking to a forecast at the Paris Blockchain Week summit earlier this month, Solana said that while their ecosystem grew in isolation for a long time, that's all changing now.
You're starting to see more and more of the sort of legacy Web3 companies, right? Like the OpenSea, like the Alchemies, companies that have been around for a very long time, looking at Solana as a place that now they need to support for their business use cases.
Federer says that OpenSea Solana NFT integration opened up huge potential for the community.
And it's great for people who've believed in the Solana ecosystem for a while, because now, suddenly Solana NFTs have access to the largest liquidity of an NFT marketplace, which is OpenSea.
Federer says the market for Solana-based NFTs is growing fast, with over 1.6 million wallets that own them on the network already. The world's fifth largest blockchain is no doubt hoping to put past issues like the wormhole hack and the network delays slowing transactions last year behind it. But despite the record $2 billion haul, Solana is a long way yet to beat Ethereum's $24 billion in historical sales. For Forecast, I'm Lachlan Keller.
BitRiver, a Russian cryptocurrency miner, and 10 of its subsidiaries have been sanctioned by the US Treasury. It's the first time a virtual asset miner has been targeted by the United States. So how are the players in the new economy dealing with the changing landscape? Discuss all this and more with Mark Lamb, Chief Executive Officer at CoinFlex, a leading crypto derivatives exchange and yield platform. Great to have you with us again, Mark.
Great to be here.
To kick it off, from being the third largest Bitcoin miner in 2021, Russia is facing a very different reality as the United States and European Union are making efforts to shut down crypto mining in Russia. The IMF says crypto mining could be a route to monetize Russia's energy assets and evade sanctions. What are your thoughts?
We have so many blockchain analysis tools to actually minimize the damage and also effectuate sanctions and enforce these on very, very specific miners. So rather than, I think generally most exchanges haven't banned all of Russia, which you could imagine exchanges deciding to do if there wasn't tooling available to enforce very specific sanctions. An exchange could make the commercial decision, oh, this is just too difficult to deal with, politically risky. We don't want to be dealing with any Russians for compliance reasons, just to go overboard, and so we'll just cut them out. And I think the nice thing, the upside of blockchain monitoring tools like Chainalysis, Elliptic, and others is really that you can be very, very specifically targeted towards specific miners, specific groups of addresses, specific wallets. And that's ultimately the upside of the blockchain. That's the power of blockchain technology. Everything is open. Everything is happening on a public ledger. And because it's all on a public ledger, you minimize the damage to the general population.
Well, everything is on a public blockchain, isn't it? And talking about specific targeting, the founder of BitRiver, Igor Renets, was quoted saying the company did not provide services to the Russian government or work with clients sanctioned by the US. Do you think BitRiver got caught in the crossfire between the two nations, or does it highlight the inadvertent negative impact of sanctions, or there's more to it than meets the eye?
I think what you're saying around them being caught in the crosshairs, that's entirely plausible. And one of the huge costs of war is the rippling out effects of people that have nothing to do with it and may have nothing to do with it. Just having their lives upended and overturned and all sorts of downsides to their lives. So this is a complex situation. I don't know whether they were very involved with the Russian government or not involved at all, and it's tricky to say. But ultimately, exchanges have to comply with sanctions laws, and this company is now in a worse situation because of what's going on.
And talking about people or companies getting caught in the crossfire, Binance, the world's largest crypto exchange, denied a news report of sharing customer data with Russian intelligence and said that they are honoring European Union sanctions for Russian accounts. But at the same time, they don't want to block out ordinary Russians from using their accounts. How do you see these developments as someone running an exchange themselves? What are the challenges here?
Well, we're in a similar position, so we don't want to be blocking out ordinary Russians from using the platform, while at the same time we always will respect sanctions by the US and other major world governments. And so it's a tricky situation, I think, for any exchange, because not only is the Russian economy a big part of the crypto ecosystem, and at one point it was a very large part of the crypto ecosystem. I remember the days of BTCE, and the first derivatives exchange, the first futures exchange, was actually Russian, ICBit. So Russia has had a very big and long history in crypto, going back to really the earliest of crypto days. But it's it is a country with political difficulties, and it's not the most friendly towards crypto, and sometimes that friendliness goes up and sometimes it goes down. And so, and then obviously you have these factors like war, and it's something where an exchange has to be very nuanced about their statements, about how they're treading politically, about who they're appeasing and who they're, at risk of angering. And that's the thing. You have to make these choices as an exchange. And I think they're pretty easy choices to make, but the situation can also get a lot hairier. And so that's the political landscape you have to navigate as an exchange.
A rather sensitive issue, isn't it? Thanks so much, Mark, for joining in with your perspective.
Thank you for having me.
And finally, here's a sneak preview of the latest edition of Word in the Block, where we go beyond the headlines with our guest, Dwayne DeSaulnier, Director for Blockchain and Data at the Associated Press, taking a deep dive into blockchain's potential for the news industry.
Our interest and focus is, again, how can the blockchain be used to deliver news? And this is where our focus is. It may take some time, and that's fine. But one thing we're learning is that real news is not a commercial product. And it's figuring out, when does an NFT stop being a commercial product and start being a legitimate, real news product.
The full episode airs tomorrow, so do check it out. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Megha Chadha. Until next time.